Hello, my fellow property manager friends. Mark Cunningham at Grace Property Management. So what do you think about this question? If you had to bet your own money, if you had to get out your crystal ball and predict what will happen to rents in your market in 2023, what do you think? Are they going to go up? Are they going to flatten? Are they going to maybe decline a little bit? Well, let me share with you a couple recent data points, news stories that have come out, and just some things that we're seeing as we look ahead into 2023, right around the corner. What's going to happen to rents, number one, that we believe. And number two, how do we prepare for that in relation to combating that in being not passive, but being ahead of what the future brings in our industry. So here's a story that was just released a few weeks ago, maybe a week ago, from RealPage. They had a big data search, and they said RealPage reported apartment rents fell 0.6%, not 6%, but 0.6% in October from September, which was the third largest drop it recorded since 2010. Well, that's almost 13 years ago. The third largest drop since 2010. We say, well, Mark, you're missing the point, Mark. You're missing the key word there. It says apartment rents dropped, Mark. And we all know that the apartment world has overbuilt, and this isn't impacting us at all, Mark. It's single family. We do single family. Come on, Mark. Get with the program. You're losing it. You're losing it. Well, what we know throughout time is what happens in the multifamily world, in the apartment world, is the canary in the coal mine for what's going to happen in the single family world. Now, if you're scratching your head and you're like, Mark, you really lost it, because that doesn't even make sense. What is a canary in a coal mine? That just tells me you're young and you don't know those old person terms. Go Google it. If you still YouTube it, you probably don't even Google anymore. And it'll tell you that it's a precursor to what's going to happen to everybody else. I'd love to tell you the story of the canary in the coal mine, but we don't have time for that right now. So what's happening in the multifamily world very likely could carry into the single family world. Now, it hasn't happened, hasn't carried forward yet, kind of, but it's starting to. So it's headline number one. Headline number two, this was in the Wall Street Journal just last week. It said the drop in rental demand was the worst of any third quarter, which is normally prime leasing season, in more than 30 years. Yikes. See, the third quarter is typically the strongest leasing season we have all year long. We all know that. But what this same story showed was that in the third quarter of this year, demand dropped at the fastest rate that it's dropped in 30 years. You think, ooh, yikes, maybe I better wake up and pay attention to this. Let me show you one more story. This came out about a week ago. This was from Apartment List, a survey they did. It said that rents fall, and the headline said, rents fall in 89 of 100 of the largest cities. My friend, rents are starting to decline. Now, it may not have hit your market yet, but when rents decline overall, it's not this gradual, hey, everybody's at 5% less than they were last month. That doesn't happen that way. It's this herky-jerky downward movement in certain markets, in certain property types, in certain aspects of things, and it's this weird herky-jerky down, and some single-family homes demand is strong, but then this property can't get rented, and that's what a lot of places are seeing, and I would encourage you to remember this statement. See, you see, and I see, we see what is happening before it makes the news. Before the headlines get made, you see it on the front lines. You see it in the number of inquiry calls you receive to your office on your vacancies. I have heard from more property managers in the last 2 months calling me out of the blue saying, hey, I'm just curious, we're not getting any calls on our vacancies. Are you? Because we haven't heard about this. No one else is really talking about this, but we're not seeing any activity on our vacancies. We can't get these things rented. Are we abnormal? Are we doing something wrong? No, you're not doing anything wrong. The market is slowing down. Now, it always slows down seasonally, right? We're in November at the time I'm recording this. Things always slow down in November. But this is abnormally slow, as we feel, as many of you have told me you're feeling, and as some of the data is pointing out. So don't ignore what you're seeing right before your very eyes, my friends, when you see those things happening. Now, you say, well, this is what I've heard, Mark, and this is what I believe. I believe that limited supply will save the day. See, we are still we don't have enough inventory. We don't have enough single family rentals. So low inventory will make it so that the market doesn't come way, way, way down. And I don't think the market's going to crash. I mean, who knows, right? I could be the exact opposite, and maybe 6 months from now, rents have popped another 20% because of inflation. Who knows? But what I think we need to do is look at the data and kind of make an educated guess on what we think is going to happen so that we can be prepared for that. So will limited supply save the day? Well, let me offer you two thoughts on that. Number one, supply is increasing, isn't it? Have you had any calls in the last few weeks from prospective owner clients who may want to hire you to manage their house? And they say something like this. Yes, I've been trying to sell my house for the last 2 months and I can't get the price I need. So I'm considering pulling it off the sales market and turning it into a rental. Have you had any of those? We've had an awful lot of those. And I know a lot of you have had those calls because you've told me you've had those calls. So many people can't sell because the sales market is doing what it's doing. So they're converting those to rentals. That's increasing the supply. I heard a stat the other day. It said, I think it was 50% of all Airbnb rentals, like that are up for short-term rentals, have been purchased like in the last year and a half, or maybe it was 2 years. I may be a little bit off, something like that. Guess what? A lot of those places can't get the short-term rentals rented anymore. What are they going to do? They're going to take that short-term rental and they're going to put a tenant in place and turn it into a long-term rental, because everybody isn't going to Florida anymore for their short-term rentals because of all these crazy hurricanes going on in Florida. Things can change very, very quickly. So I don't think that supply is going to continue to increase. Our supply, or our supply of homes is going to continue to increase. But then number two, demand could be decreasing as well. We may be seeing decreasing demand because you say, well, Mark, hold on. Common sense would say all those people that aren't buying homes, they're becoming renters, right? So we actually will have this massive influx of people running over to rent properties. Well, that's not always the way it works out, because what we know historically is some of those people are going to move back with mom and dad. Some of those people are going to get a roommate. Some of the people are going to the basement of their friend's house. Some of the people are just not moving at all, or they're doubling up. So all of this new demand isn't coming, my friends. Now, if you're in a market that you're like, well, Mark, that's not happening in my market, congratulations, good for you. And this stuff shifts, right? It starts on the coasts, the West, it works its way through. So some Sunbelt states right now and some of those areas in the Midwest, they're not experiencing this yet. I think you may, but we want to get prepared for this. So before I offer you two suggestions on how to proactively be ready for this potential decline, certainly a decline in demand, but maybe decline in rental rates, let me thank the sponsor for this video, Tenant Turner. I had lunch today with Andrew from my office. Andrew's one of our amazing leasing people. We were talking about the leasing and that part of the business and what's going on. And he said to me out of the blue, he said, Mark, I am so glad we use Tenant Turner. It helps me so much, saves so much of my time, pre-qualifies so many inquiries before I have to spend my time on the phone with them or email them or whatever it is. Thank you, Mark, for letting us use Tenant Turner. We love it. The highest compliment I can pay to any company like that is to use them, and we use Tenant Turner. They help us take our inquiries on vacant properties and screen them through the process. If you need help with that, guys, reach out to Tenant Turner. Tell them to set you up the way we're using them at Grace Management. Okay, two pieces of advice on how to do this. Number one, you need to inform and educate your owners. When your owner calls you and says, hey, that property's been sitting vacant for 3 weeks, what are you doing wrong? Are you not advertising it well enough? Why can't you get my property rented? What are you going to say to that? Well, hopefully what you can say to that is some of the information I've just shared with you. Now, you need to be proactive. You shouldn't wait for them to call you and ask you why you can't get it rented. You need to reach out to your owner clients proactively and say, hey, part of our job is to educate you, Mr. Owner, and so we want to let you know that the rental market is slowing. See, they don't read these stories. They're not ahead of this game. All they hear is inflation's going up 20%, so they think incorrectly they're going to get another 20% in rent increases next year. You better proactively reach out and tell them, whether you do it through an email, through a phone call, through a blast, through a newsletter, through whatever you do, through a video, that's how it should be. Reach out to your owner clients and tell them the market is slowing down. Educate them. Let them know that this stuff is happening, not just all over the place. Share this data with them. We shared a Wall Street Journal article. Google the Wall Street Journal article on, like demand decreasing as people move back in with roommates or something like that. We sent that article to many of our owner clients, especially those with vacancies, to show them that, hey, this is what's going on. That's number one. And number two, we want to make sure that we are being appropriately aggressive in dropping our rental rates. See, we can't just sit back and say, well, I guess we'll just wait and see what happens. I hope my property rents. No. We're going to inform our owners. That's part one. But then part two is, hey, Mr. Owner, here's what we're going to do to address the fact that demand is decreasing. You may have to you may actually drop rents. Yeah, if things are not renting, you have to drop rents. You have to inform your owners on why that is the best decision to make. You may have to offer move-in specials. You may have to offer free applications, waive your application fee. You may have to actually drop your scoring criteria. if it gets that. Now it hasn't, that's like an emergency break glass in case of fire. We don't want to do that. But those are the levers we have to pull out there to help us improve our rental process, increase demand in this market we're in. Now, who knows? 6 months from now, everything I said could be wrong, but I think we need to be prepared for that. My friends, how can we help you at pmbuild.com? You need help figuring out how to make more money? We can tell you a lot about that on pmbuild.com. You need checklists, you need system manuals, you need policy and procedure manuals, you need learning how to market your company. We've got it all for you on pmbuild.com. Jump on there, see what can help you as we help you build, grow, and protect your property management company. I'll see you in 2 weeks.